Greetings and welcome. This, as might be said, is the first of the technical sessions. We had the inaugural for the CMA Sri Lanka National Management Accounting Conference for this year, the inaugural yesterday in the morning. Some of you may have been there, some of you were not, but we did have a vibrant opening. Now, today we will be focusing on the necessary things that were also surfaced and brought into the domain of this conference yesterday, but more in detail today. But before we go too far in everything else, there is a publication, a book which comprises research that has been done, Sri Lankave Rajya Vyavasaya, which has as its author the academic and a practicing manager, Dr. Udayasree Karyavasam, who we now invite to come onto the stage to hand over to the conference chairman, Professor Lakshman R. Vatavala, a copy of this book, a formal, shall we say, a handover, although the book has been published a short while ago. In the month of March 2022 was when this research volume was first published. But now here we are, having it handed over. Yes, we would like to invite President Incumbent of the South Asian Federation of Accountants, and one of our own, in fact, Mr. Henaka Bandara, who will also receive a copy of the same volume. So this, thank you, this, the substance, shall we say, of this will emerge later on as part of a discussion. And you will be interested to know that with state enterprises being what they are or what they should be, this substance will come in and will be dealt with in due course later on in our conference. But as we said, we are now set with session number 1. We alluded to the fact that yesterday some thoughts were brought to bear about the opportunities in the crisis to rebuild the nation. Okay? So one response in a crisis is to despair. That's the easy one. But then to recognize opportunities, that's a little more difficult, but can be done. That's what we were assured by many of the speakers who we heard yesterday.
That vision is important, the ability to recognize the opportunities, but then action is needed. So there's responsibility, accountability, as well as the need for proactive planning and then measures and action taken in a spirit of partnership. There was a lot said about how the management accounting professionals need to partner with their organization, but also with the country, the idea being to rebuild the nation. So each session today delves deeper into issues and situations that confront professionals and businesses. If rebuilding is what is desired, capital needs to be generated. For that, there's need for skills, competencies, aptitude, and resolve. So where should that resolve emerge from? Stay and find out. Each session will have a take-home lesson.
Now, the idea is that the take-home lesson is not one we take home and leave on a shelf to be forgotten, but rather it needs to be converted into the real world, action, wherever you have influence in the organization that you are in. If you are able to implement, to suggest, to encourage, vitalize those who are with you, then the purpose of this conference and its discussions will bear fruitage. I think now's the time to, after you have done the introduction of the session chairman, to also introduce those who are speakers of the first session to move across and occupy the places that have been reserved. So, Dinasha, would you mention who we would like to have up on the stage?
So the take-home for our first session is Overcoming Economic Crises to Build an Industrious Nation. And our chairman really needs no introduction, but we shall, for the sake of formality, introduce him. Professor Lakshman R. Vatawala has led the Sri Lankan accounting bodies, starting with the Chartered Accountants and then the South Asian Federation of Accountants, and is the founder of the Accounting Technicians, as well as the founder of CMA Sri Lanka, and he's SAFA board member, as well as chairman of the SAFA International Relations Committee. He received the titular National Honour Sri Lanka Sikh Harmony in 2019 and was installed in the Hall of Fame of the Institute of Chartered Accountants, as well as having received the Lifetime Achievement Award from CMA Sri Lanka. He was, in 2020, appointed adjunct professor by Deakin Business School, Melbourne, Australia, and he has been doing a lot of the things that we mentioned in terms of taking action to make Sri Lanka a more positive environment for businesses and for the professionals. So we welcome him now, Professor Vatawala.
And then we'd like to invite Mr. Hennayaka Bandara also to, we will introduce him a little later on, but he will take his place. And then
we have Dr. Nishan Dimel, who's Executive Director of Verite Research.
And we would also like to invite Mr. Denver De Silva, who is the Senior Vice President working with Virtusa in the area of sustainability and facilities. That's the word, yes.
We will have another panelist joining us remotely, and that's Professor Ho Yu Ki, but more on that later.
So we shall hand over to the chairman of the session, namely Mr. Lakshman R. Professor Lakshman R. Vatawala, and then, yes, we will invite him to come across to the lectern, and then we will invite the other speakers, one after the other.
Good morning to all of you. Our distinguished panel on the stage, the President of SAFA and Vice President of CMA, Mr. Hennayaka Bandara, Dr. Nishan Dimel, the Executive Director of Verite Research, Mr. Denver De Silva, the Senior Vice President, Sustainability and Facilities of Virtusa, and Professor Ho Yu Ki, who is connecting online, the Associate Provost, Skills, Future and Staff Development for the Singapore Institute of Technology. So, we are very happy that you are here. Of course, certainly very many are registered, but we have to start in order that we could get on with our business. Now, today's topic is overcoming economic crisis to build an industrious nation, and of course the theme of the conference is Crisis and Opportunity to Rebuild Sri Lanka. So I'm sure we have very eminent speakers who will be speaking to you on this very topic, and I'm sure that they will be able to go through the different aspects that we are trying to put through. And I was just trying to see, there was something that I saw, a research work done by the International Federation of Accountants, that is the IFAC, where they had done it for the G20 countries, I thought it might be useful for me to give some of their findings, especially because we have some eminent economists and the digital technology specialists here. There were a few areas that they looked into. They were looking at how the accountants can make an impact on the economy, and how if 500 accountants who are from professional bodies that are members of IFAC, how they can have an impact on the various economic factors. The first thing they looked at was on the GDP, and they said that actually they calculated 500 accountants per 1 million population. So what they said was that if that was the case, the GDP will go up by about 10,000 US dollars per capita income. So that's one area which I think will have a significant impact if we find that there are more accountants in the economy or in business and government. Then the next one was on exports. Exports too, where a significant increase of about 9 to 10% could be achieved if this number was available. Then the other one was on the competitive index, the World Competitive Index, where they said that the competitive nature of the countries will go up. I think they had based it on about 2 to 3%. It will go up by 1 to 2%. So in all these aspects, you will find that professional accountants are very useful for the building of the economy, and definitely that they will be able to play a very important role. So, but we also have the other professions now, of course, the people who are speaking, and of course the economy is very important, but the other area is the digitalization. Now yesterday we listened to Mr. Girish Ramachandran, who is the Vice President or the President of the TCS, Tata Computer Services, which is one of the largest computer institutions, and he said how in India they have been able to make a great change as a result of using the digital technology. Now even here, with the petrol queues that were there, by using the QR system, they were able to really solve most of the problems that they had. The queuing system and maybe a lot of other underhand things that were happening were able to be stopped. So you can see that what we are talking today will be very useful. But the most important thing, I think, is Professor Ho, because as you know, Professor Ho was a professor in accounting at the National University of Singapore, but Singapore set up a special university, the Singapore Institute of Technology. Now this is something that is missing in Sri Lanka, you know. Even in India, when they started their liberalization, or even before liberalization, it was the technology that really took them. Of course, it started with Sri Jawaharlal Nehru when he started the Indian Institute of Management, Indian Institute of Technology, Indian Institute of Science, Indian Institutes of Medicine, all those top-class universities that were started that time, and some also with the foreign collaboration. But also in addition to that, they had two methods by which the approval for the universities could be given. One was, of course, the normal UGC. The other one was the technology and business area, as a result of which they were able to educate all their people. Today, there is no one in India, if they have obtained their whatever called similar to A-level, everyone will be able to get a university education. Sri Lanka, unfortunately, maybe if you take the last 10 years, more than 1 million youth have lost opportunities on obtaining a degree. So degree is not a useless degree, but a useful degree, like engineering, IT, which really transformed India. The India's earning capacity greatly increased as a result of that. So I can't see why Sri Lankans can't see this. Sometimes I have spoken to university professors, they are saying if we produce more, they will be unemployed, that is the way that they talk, but we have to give the employment, foreign investment, we don't have to sell our lands, people will come into the country and invest. If you ask Virtusa, they will tell how it will happen, because they were wanting to expand in Sri Lanka, but they had to go to India because no people were available. Now, these are common sense that a person should have right from the top. But if they don't have common sense, you need a situation that it has come to. So I don't want to speak very much, but I'm sure we have very able people who will tell us not only the problems, but how we can solve it. That is the answer that management accountants are giving. We are not here to complain, but we are here to solve the problems and take it forward. So thank you very much, and I'm very grateful for all of them, because I know that they are very busy, but they kindly consented to come and be present and speak here. Thank you and all the best.
Thank you, Professor Vatavella, for those astute observations on the way forward. The key is not complaining, but taking action. And so it's a pleasure to be able to invite our next speaker, who is delivering the address as the president of SAFA, the South Asian Federation of Accountants. Mr. Hennayaka Bandara is a fellow and founder member of CMA and is the vice president of the Institute of Certified Management Accountants of Sri Lanka. If you'll bear with me a moment, I'll complete the introduction. Thank you. And of course, is the incumbent president of SAFA. He was recipient of the CMA Award for Excellence in Business Management. And in addition, his contribution to the field of professional education counts more than 3 decades. He is served as past president of the Association of Accounting Technicians of Sri Lanka, the past president of the Association of Professional Bankers of Sri Lanka, as well as council member of CA Sri Lanka, among many other prestigious positions that he's held. He was general manager and CEO of National Savings Bank and was a member of the expert group on the implementation of the stimulus package for the banking, finance, and leasing industry to advise during the financial crisis. And so it's apt that he will be advising us on rebuilding Sri Lanka. That's an abridged portfolio, as it were. So please do welcome Mr. Hennayaka Bandara.
Thank you, Dinasha. Good morning to all of you. Let me be very brief. President Professor Lakshmana Vatavella, eminent speakers, panelists, participants, ladies and gentlemen, we all gathered here in a time of division and uncertainty. I don't have a definitive answer to that question. But I know that our eminent speakers and panelists today will have plenty of comments and views on how we should make use of the opportunity to rebuild our motherland. There are many who say dark clouds are gathering due to the economic issues prevailing world over, including ongoing Russian invasion of Ukraine. No one knows how difficult the near future will be, but uncertainties are clear for everyone. If I recall, when the big financial crisis hit in 2008, the regulators had to introduce structural reforms to banking sector to make it more stable and efficient. However, knowing very well that there will be an economic crisis in our motherland, no reforms were introduced as expected, and professionals and educated people who were directly supporting the policymakers and responsible for the entire economy of the country were either silenced or delayed to make appropriate decision to address the issues or mitigate the risk. It is true to say that we can't predict or prevent any future crisis, but it is also true to say that we can take action to be well prepared. Ladies and gentlemen, the fundamental question we should ask today is, are they ready for crisis right now? I think if you speak to 10 people, or maybe your friends, or maybe your neighbors, all will ask the same question, whether we are ready for the crisis right now. I have no doubt our speakers and panelists of all 4 technical sessions will have much more to say on the topics we intend to deliberate throughout the day. Ladies and gentlemen, with those remarks, let me conclude and give the floor to the range of excellent speakers from both the public and private sector. I know you all have heavy agendas, so we are extremely grateful for your presence. Thank you.
Thank you too, Mr. Hennaka Bandara. You asked a very interesting, relevant question. Are you ready? Well, we will know if you take up that pad and the pencil or the pen that has been provided and you are ready, then you know you are in fact ready, or you'll never be ready. So I'd like now to move to our next speaker, and the topic is overcoming economic crisis and debt restructuring. The media has been talking about this, but what do you know? And what does Dr. Nishan Dimel have to share on the topic? He's an alumnus of Oxford and Harvard universities and is the executive director and head of research of Verite Research. Likely you have visited their website as well. And that's a think tank that provides analytical data and advisory services on economic, political, and legal issues in Sri Lanka as well as the larger Asia. He is a well-recognized economist. He has also served as the executive director of the International Center for Ethnic Studies, that's a while back, and on the board of the Sri Lanka Foundation Institute, among other organizations. And internationally, Nishan has held several governing, teaching, and research positions, including being lecturer in economics at Oxford, where he was a Chevening scholar. So we hand the proceedings over to Dr. Nishan Dimel. As we said, important topic, overcoming the economic crisis and debt restructuring. How does it happen?
Thank you, Arun, for that introduction. Let me greet the past chairman of CMA, Professor Lakshman Vatavala, the vice president, Mr. Henanayaka, and my fellow panelists, and all of you who have taken the trouble to be here this morning. It's always a good sign when people turn up for technical sessions. It's easy to get an audience for opening events and ceremonies, but technical sessions tend to be attended by those who are serious in understanding and digging deeper into issues that the country needs to solve. So thank you for being here and being interested. The topic in front of us is about overcoming the economic crisis, including with debt restructuring. And the overall theme that we are dealing with is crisis and opportunity. So how do we move from crisis to understand the opportunity? And this is the setup. Let me just give you a sense of structure for what I want to do. I will look at the symptoms of the crisis immediately because we need to understand what they are and explain them, but also explain the difference between symptoms and causes. So, you know, when you go to a doctor, you tell the doctor your symptoms, but the doctor does not diagnose the symptoms to be the causes. And it would also be inadvisable for the doctor merely to treat your symptoms. He does try to treat your symptoms, but if you're going to get well, he wants to treat the causes. So why is it that Sri Lanka has failed to deal with these kinds of causes or symptoms? So let's recognize past failures, because positive future action is built on understanding why you failed, understanding the deeper causes, and treating the causes. So that's really going to be the way I proceed. Let me just outline the symptoms very quickly, and you can feel them and see them. So symptoms are easy to recognize, right? Because that's what you feel and see. You see high levels of debt, high inflation, very serious symptom for people living everyday lives and trying to make ends meet. High interest rates, if you're trying to borrow, this is severely problematic. If you're a business, it is severely problematic symptom. Low economic growth, loss in jobs, loss in economic opportunity, people leaving the country, and increasing and high levels of poverty. Okay, and let me just give you numbers around each of those things. Debt to GDP, even despite the very high inflation. Inflation helps you bring debt to GDP down because the GDP base grows by inflation, so grows much faster than debt. The real value of your debt falls. Even with the high levels of inflation, we have debt to GDP of almost 122%. We have inflation that is unprecedented in Sri Lanka's history. 69.86% on overall inflation, 94.9% on food inflation. These are numbers that, as a country, Sri Lanka has never seen. The numbers that we are accustomed to seeing in countries that we think are sort of the extremely badly managed, crisis-hit countries in the world. And we are accustomed to seeing these numbers as observers in distant places that we think run bankrupt states, not accustomed to living inside those consequences, but that's what we are doing now. And we also have the largest ever negative growth that we have experienced. So the current projections are that growth will be negative 8.7 in Sri Lanka at the end of the year, which comes with then job losses, contractions in businesses, loss of investment, and all the associated outcomes. All this is leading to a huge increase in poverty, but especially the inflation, because incomes are certainly not growing at the rates of inflation. So what you can see here is the poverty line, and I want to focus your attention to the poverty line in 2019, which was almost 7,000, you can see. Okay, so that is the per capita income you needed for a household to be out of poverty. So if you had a household of 4 people, you've got to multiply that number by 4. So if each person in the household, or there is enough income to give each person almost 7,000, that was the line at which you could cross poverty, or so about 28,000 rupees in the past. You can see that line has now come to 13,480 because of the inflation, and will soon get to 14,000. So effectively, the income you need to not be in poverty has doubled in a very short space of time. That's just since the last 1.5 years. So there is a study out by the University of Peradeniya, though that's not a study that's formally done by government yet, that says the level of poverty in Sri Lanka currently is 42%. Now that's not surprising as a finding, because in 2019, with the 7,000 rupee threshold for poverty, the poverty level was 14.3%. Now that's doubling, and it's not unusual for poverty to more than double when the poverty line doubles, because the people tend to be concentrated around the poverty line, or there's a lot of density around the poverty line. So when the poverty line doubles, that poverty should triple is not a surprise. And therefore, the 42% is nearly 3 times what it was, is not a surprising number. It is surprising when you think about it, that Sri Lanka has moved to a situation where close to half the population can officially be considered poor. This is also associated with very high interest rates. That's another symptom that you're seeing in the middle of a crisis. People lose confidence in the country, they lose confidence in the economy, they lose confidence in the rupee, and the ability for government to borrow today, and the need for the government to borrow to finance repayment of debt, has escalated the interest rate to a level that is also now quite unprecedented, or very high, at above 30% in the short term. And the real problem with these symptoms is that if these symptoms continue, actually the crisis will be very hard to put down. Okay, so at 30% interest rates, the government can't find debt sustainability easily, and we'll come back to that. But what I want to say is that the symptoms are not the causes, and we've got to peel off a layer. When you try to understand the causes, you can see that one of the main causes is that Sri Lanka's government had so little revenue. Sri Lanka ranks 5th lowest in the world for revenue in 2022. That is, revenue as a percentage of GDP in Sri Lanka. Only about 4 or 5 other countries in the world have a lower revenue as a percentage of GDP. The second, so this is really the way in which Sri Lankan government has continued spending while decimating its revenue. That's a fundamental cause of the crisis. And of course, that cause or that problem was significantly increased at the end of 2019 with huge tax cuts, which unfortunately was celebrated by the private sector and the businesses, effectively cheering the oncoming of their own doom. Okay. The second type of problem that you see that are causal, okay, are that actions without a plan set up the crisis. So Sri Lanka got into international and national borrowing at high interest rates after 2008 when it lost access to concessionary debt. Now, having lost access to concessionary debt, it was important to have plans of how you finance debt that you take at higher interest rates. Sri Lanka went on a borrowing spree to fund infrastructure and other spending without actually a plan to say, is this going to give us the kinds of returns that are going to enable us to pay back the debt? So the payment of debt actually came 5-10 years later. And as you tried to pay it 5-10 years later, you can see the consequences in 2015 to 19, that debt increases by 42.8%. The stock of debt increases by 42.8%. But 89.8% of that increase goes simply to pay interest on the debt that has already accumulated. So you got into a dynamic where you're borrowing more and more just to service interest, not even to pay back the capital, but just to service interest of the existing debt. So this is where the problem of debt unsustainability was evident when you saw that the total debt is increasing by over 40% just to keep the interest serviced on past debt alone. But you get into that situation because you didn't have a plan to deal with it. And I think that is another familiar situation, that you postpone the problem of having a plan to deal with the consequences of your actions today, because that is in the future, and you get to the future and it's very unclear what you can do, and the problem is quite severe. And we know that in our lives also, right? Lots of the problems of health that people have when they get to my age happen because of decisions they took when they were younger. You didn't eat in a healthy way, you didn't exercise, and then you get diagnosed with cholesterol, with diabetes, and after you have cholesterol and when you get diabetes, these are very hard problems to solve, but you get there because you ate and had a lifestyle that didn't have a plan for your health. Sri Lanka's economy is like that. We had a system of spending, of running government without a plan for the future, and now we are suffering the consequences of that health problem in the economy that is quite chronic and difficult to solve. So actions without a plan set up the crisis. But in the middle of that, actions without analysis drove the crisis. So not only didn't you have a plan, but in the middle of the crisis, you didn't have an analysis. And of course, even for a plan, you would have needed analysis. But even in facing the crisis, Sri Lanka in 2020 lost access to international financial markets. Up to then, what happened was Sri Lanka the problem was becoming more and more severe, and we simply borrowed more and serviced the debt and borrowed internationally. Getting into 2020, because of what I've explained to you and the debt dynamics that we had of borrowing to repay interest, international creditors said, hey, this country does not look like it's going to go far. Credit ratings fell, access to international debt stopped, and Sri Lanka had two choices at that point. You had to change your behavior and get back access to credit ratings, right? So it's like, somebody is dropped from the cricket team because they are not fit enough, and you say you can't play. You have to immediately decide, look, I'm going to do something, become fit again, take the tests, and get myself back in the team. Sri Lanka needed to get itself back into credit ratings that would allow people to lend. If Sri Lanka didn't do that, then the only other choice was to stop paying the debt and restructure it. Because Sri Lanka has a limited amount of foreign reserves that you need for essential spending like pharmaceuticals, for petrol, for the imports that the country and the economy need to produce the stuff that you need to do, that you export. So there were essential imports needed for which reserves were needed, and you couldn't spend all the reserves because by repaying the debt if you couldn't borrow to keep some sustainable situation. So you had to stop paying the debt if you couldn't get back the credit ratings. That was option number two, analytically speaking. And in terms of the analysis, economists basically flagged one of these two options and said there are only two options for Sri Lanka. Either solve your budgets and get back confidence and get back your credit ratings, or suspend debt payment and restructure debt. Sri Lanka, interestingly, did neither and drove headlong into a crash, which is what we experienced. We experienced the worst possible crash as a result. Many of the countries that are quite bad in the world in terms of their management have done it better. Even Lebanon did it better. When Lebanon suspended debt payment, they still had reserves to buy oil for almost a year. Whether it's Argentina, Ecuador, the worst debt crises in the world that we see in the last 10 years were managed better than what Sri Lanka did, because Sri Lanka accelerated over the precipice rather than hitting the brakes and either working to improve its ratings or to suspend debt payments. And so you had, there was no third-party bailout. And I want to point this out, right? So, debt restructuring was really the option. Number three was the option that Sri Lanka should have taken, suspending debt when it was too late. I mean, there was a time when the ratings had come down so much that there was no way to regain the ratings. Debt restructuring was the only choice. You had to suspend repayment and save those reserves to solve the problems of the country. But we had people talking about hope and opportunity and why things could be better, even at that time, and said, look, it's okay, we will get third-party bailouts. So you had unanchored hope on some solution that would emerge from somewhere. Of course, it didn't emerge. And so you had the worst possible crash, which was disorderly default. So we didn't even have time to negotiate with our creditors and say, actually, let's have a consensual suspension of debt, which is how it should have been done. But we had a unilateral suspension of debt, which then is quite much more problematic and difficult to resolve. So I think what I'm flagging here is that right into the crisis, as we were accelerating over the precipice, we had hope, but it was unfounded hope. And so in treating the symptoms and in talking about opportunity and hope today, we have to be careful that we don't repeat that process of hope without foundations or basis, and ask ourselves, what are we really doing, to solve the problems and treat the symptoms? So as you know, the government has said that it's running high inflation to reduce debt. That's extremely painful on society. It can do standalone external debt restructuring. That's what it has announced. But it can also do some domestic restructuring. It has left the window open for that. In fact, the government has indicated that it can either do external or a combination of external and domestic debt restructuring, as well as running high inflation. And it has set out some targets, saying here is the way in which we will, these are the targets we want to achieve. They've been agreed with the IMF. It requires the government to increase revenue by 68%. Compared to the revenue last year. So extremely ambitious targets. And one of the ways in which the government has set about that is now to increase hugely the taxes on the middle class. The red line shows you sort of the 2019 tax levels. The blue line under that shows you what the government had proposed as taxation in May all the way up to the interim budget. And the green line shows you the sudden big jump in taxes that were actually imposed without much discussion in the last moment in what we call the October 2022 taxes. And they're pretty stiff, right? They're extremely high level of taxation because these revenue targets are now extremely difficult to meet. But when we look at the past, what you can see here is that Sri Lanka has consistently failed to meet its budgeted revenue targets. The red line is where Sri Lanka ends up. Below the actual targets that are the blue line. So the blue line is what we say the revenue will be. It's consistently less. Primary balances also, we can almost always miss the targets, except for a period in 2015, 16, 17, and 18, we came very close. On the deficits, because we cut expenditure a lot, we sometimes meet targets, but certainly not when there are elections close. We tend to miss targets, and overall, we mismanage our deficit targets as well. Deficits, the red line, are a lot higher than what is promised. And being in IMF programs doesn't seem to help Sri Lanka achieve targets. These are the blue lines are the targets that we promised during IMF programs. The red line is the actual outcome. And you can see how revenue targets are constantly missed, even inside IMF programs. Primary balance targets are constantly missed, especially, except in the first 2 years of IMF programs. And budget balance targets are also missed, except perhaps in the first year of IMF programs. Consequently, 7 out of the 16 programs have not been completed that Sri Lanka has engaged in. Almost 50% fail to get completed. And in the last 56 years, we've been in IMF programs for 28 years out of them. So we go to the doctor, we think, and we only take the medication given for the symptoms. We feel better, we continue with the lifestyle, we return, and repeat that behavior. And this is the cycle. So I think the lesson to learn in coming out of the crisis and treating the causes is that you can't solve this problem by acting in the same ways that you acted before. Unanchored hope without analysis and decision-making driven by vested interests, which is the last section I want to deal with, is really why Sri Lanka ends up in this situation. And if we can't solve those two problems, then there is very little basis for hope for Sri Lanka to come out of the crisis. Okay? Let me deal with these two things one by one. The IMF, for the first time, I mean, they're very reluctant to do this, but has identified corruption as macro-critical in Sri Lanka. What are they saying? They're saying if you can't solve the problem of vested interests, which is, I'm using that word to signify what IMF is saying in terms of corruption, then you can't solve your economy. You're not going to get there. Okay? So reducing corruption vulnerabilities through improving fiscal transparency and public financial management, all these things the IMF says is critical. Okay? So doctors' advice is there. And let me give you an example of how the taxes that are there today still display very huge influence of vested interests. I'm going to just take, one example, tobacco taxation. Now, we know that food inflation is at 94.9%. Alcoholic beverages and tobacco have an inflation of 39.4%. And even that is driven by price increases more than tax increases. Okay? Historically, Sri Lanka has taxed tobacco, let's say just take alcoholic beverages aside, at 75% of price. Today, that rate is coming down, not going up. Historically, Sri Lanka has used tax to drive up tobacco price at 75% of the price being taxed, sometimes even more, to ensure that the per capita GDP, with the per capita GDP, you can consume just a little less than 10,000 cigarettes. Today, that number has kept escalating. This is not even updated to today's numbers. We are allowing cigarettes to become more affordable by imposing lower taxation. Now, the math has been done. There was a formula in Parliament presented by the Minister of Finance in 2019 that said, let's fix this. Let's make the increase in taxes track GDP, nominal GDP growth, and make sure government gets revenue. If you applied that taxation, you can collect, now this was all the way back in June when inflation was lower, in 2023, between 45 to 50 billion extra just by proper taxation of cigarettes. This is research that, all the researchers in Sri Lanka, of course, except the ones that work for the cigarette company, agree with. The fact is today, and I think there is something important to understand, that the middle class ignored the power of vested interest and influence as long as we could borrow internationally and pay for things that government needed to do. Today, about 50% at least of the taxes of the middle class will go to subsidize lower taxes on cigarettes. So today, the middle class that ignored the importance of governance and the importance of keeping vested interests at bay will pay from their salaries. So the taxes you pay on your wages starting October, November, you can know that 50% of that could have been taken away if cigarettes were taxed properly. And in a way, I think that's not a bad outcome. It teaches society and the country that not being interested in democracy, not being interested in governance actually costs you something. You don't get to live your good lifestyle if you don't care about how the country is governed. We all know that IMF is saying it to us, that the country is misgoverned, and that the crisis is a crisis of governance before it is a crisis of economics. And you can't solve the economy without solving governance. Look how significant the middle class taxation is. It rises to 36% within a very narrow band of the middle class. And that's compared to what was proposed in the yellow line. Even countries like Thailand that are much richer don't put such high levels of taxation until people earn much larger incomes, and certainly not on the middle class, right? Now, another way to collect from, so it's the middle class and not even the rich that are getting taxed so much, because if you want to collect from the rich who are not on wage incomes, then you have to target withholding tax, because that's how contracts are paid, that's how interest income is earned at 30%. And Verite had a paper with the economic policy group that we run with renowned international and local economists that said withholding tax must come back, not be a final tax, and be at least 10%. And you can add 185 billion in revenue with that. Withholding taxes came back, and the advice was taken. It's not a final tax as so far as we know, but it came back at 5%, which means out of this 185 billion, you're collecting less than half. And even this is an underestimate because it was done when interest rates were lower. And if you're collecting only half, you can imagine then that another half of your taxes go to subsidize taxes on the if you're paying taxes only on your wage, you can be satisfied that the other half of your taxes, one half goes to subsidize the tobacco industry, and another half goes to make sure that the very upper classes have lower taxes. And they're often earning that taxes perhaps through high interest incomes at 30%, for which your taxes are paying. This is my last slide, that curbing corruption, studies say, can yield significant fiscal benefits, okay? The least corrupt governments collect 4% of GDP more in taxes. IMF research itself shows that as you move up the you become less and less, you have a better position in the corruption ranking index and governance indexes, your GDP can go up by 1.5 to 2%. This was the case in Georgia when they replaced their government and their president in one fell swoop and got, tectonic reform and change. Their tax revenue jumped from 12 to 25% of GDP while they reduced taxes on the middle class. So a sign of actual success and opportunity and hope would be when the government is able to say, because we have taken on the vested interest, we can reduce your taxes and still increase government revenue. But when the government says, we are going to tax you a lot because the country is in a crisis and we need your money, and you can see that vested interests are still being subsidized, then that's not a sign of survival or hope. So let me end by saying this. My time is up, I notice, that hope and opportunity to come out of the crisis is there, and we can see it. You can do the analysis, you can have a plan, and the particular actions that need to be taken have been already designed and written up substantially by organizations like ours and others. But the analysis and the planning to actually to prevent the dominance of vested interests is the substance of hope. Hope without substance is just delusional, but hope with analysis and a plan for improving governance and putting corruption to bed is real opportunity for the economy, which I hope sincerely that Sri Lanka will be able to achieve. Thank you very much.
Thank you, Dr. Dimel, for that evocative explanation. Now, technology can often help with that national lifestyle change that Dr. Dimel mentioned. But how and what other factors are brought to bear? We'll find out now from Denver De Silva, who is a Senior Vice President of Virtusa Corporation and a Director of Virtusa Private Limited, is the Global Head of ESG, or Sustainability, and is a member of the ESG Committee, which has Virtusa Corporation Board oversight. Denver has served as Virtusa's representative on the Board of Directors of the UN Global Compact Network Sri Lanka since 2016, and has spearheaded Virtusa's ESG sustainability initiatives. As the global head of facilities, he's responsible for managing 48 locations across 25 countries and is an IT professional with over 25 years of experience. He reveals now how harnessing digital technologies and environmental, social, and governance, or ESG aspects, can sustain the economy and overcome crisis.
Thank you very much for the kind words of and the introduction. Let me begin by thanking Professor Lakshmanar Vatawala for inviting me over here to speak on the subject amidst this very distinguished gathering of professionals, intellectuals, and people of high standing, and fellow panelists, and Vice President here of CMA. Thank you, sir, and thank you, Nishan, for those great words. And I'll make use of the opportunity to dovetail the issue of vested interests that can also be addressed when you implement the technologies that are available to us. So moving on, I'm just sort of touching on some like headlines, right? Where companies have spent the past few years dealing with uninterrupted business. So we don't need to understand, we have seen the crisis. There is no challenge to the understanding it. But what I am trying to do in the next few minutes that I'm addressing all of you is to make sure that we highlight what are the opportunities of technology that is readily available. And especially for the financial and accountants, you folks plan budgets, are part of the strategy planning, and I would like to shed light on these opportunities that you may wish to make use of. As they say, never let a good crisis go to waste, as Winston Churchill mentioned. I think that's a great statement. And how do we move on from there? So, tech power is great equalizer. And why do I say this? Sri Lanka, with its digital gap being bridged, I think we have one of the highest digital penetrations in South Asia. I recall about 5-6 years ago, there was a study done on, there was a fuel shortage then, not like now. And within a space of 5 to 6 hours, the whole of Sri Lanka knew that there was a fuel shortage, irrespective of the government's communication, which showed that the means of communication is functioning. People get to know. And with this, it enables us, where a student anywhere in Sri Lanka and a student in New York, to India, to any part of the world, has equal opportunities. And that's what the tech power has done. You're not short of access to any research papers that anyone has compared to the others. And just look at the crisis of COVID. That was a digital transformation in itself. I don't think there's anyone in this room who hasn't been transformed, right? If you take it from learning to be minimalist, learning to manage the online ordering, the QR codes that came subsequently, the ability to get a digital pass to get your scanned copies, birth certificates are being issued digitally, so many other things, right? And the list goes on. But it just showed that with the crisis, necessity is the mother of invention, and we have these technologies, we started using them. All of us decided to work from home. Virtues, I can tell you, we had these technologies with us, being a tech company globally. But the truth was, even though we had a work from home requisition, none of us had ever used it, right? Come 31st March, Virtusa globally was 98.6% work from home enabled. We did it in the space of 3 weeks, right? And this is a workforce of over 25 to 30,000 people at that time, right? Some of the decisions we made, first we issued all the laptops we had. Then we ran out of laptops, we said, okay, buy them. We ran out of buying laptops. Then what do? We rented them. That also didn't work. Finally, we told the people, whatever machines you have on your desk, take it home. There was no regulations, no asking. We said, just take it. We will bear the consequences. And the fact is, we had zero asset loss in this whole exercise. It was trust. It was confidence in the people. And placing that and saying, if you want your job and you want to survive, we just need to change gears, right? So, this brings us to a point of what are the other technology tools available. So, first is you just manage your basic infrastructure. But also using data, and I love the fact that Nishant alluded to all the data that he was sharing, and making a data-driven decision-making process. How many of us really look at the opportunities of using technology for process automation? How many times have we looked at evolving the roles and structures that each one of you do? Many years ago, our payroll was manual. Today, if I ask you to go manual, you'll want to know whether we are feeling all right. But the fact is, the use of process automation, machine learning, digitalization, the cloud transformation, you have IT departments, large and there's technologies out there. Consolidate them and looking at how companies are using technology to optimize. That's what Virtusa does for some of our largest clients. Banks, insurance companies is consistently optimizing these things using the technologies. We even have low code to no code and a plethora of other things that we do. But my submission to you here is think about what is the opportunities that you're doing. And we'll look at some of those technologies and things as we go along. So first is technology brings in efficiencies and optimization. And why do I say that? Obviously, it reduces time and effort. And also, it brings improving accuracy systems and processes. Today, even we talk of crime and other aptitudes. If you are doing bank transfers amongst most of your transactions, the opportunity for corruption reduces. There is no question about it. It's not easy for people, you start, I'm not saying it's impossible, but you start with the little steps. You look at the opportunity to explore digital transformation across the enterprise with measurable ROIs. What are you investing in? What is your department doing? How are you changing this in your business? What are the other opportunities? What are the services that you can offer? Some of the things we say is bridge the gaps in opportunity using automation and technologies to build speed and accuracy, right? It's all about doing it right, getting it right the first time. Provide better quality data and data-driven decision-making. I think this is very important. As Nishant said, hope without an anchor. What are we talking about, right? Substance, yeah? So you need to have that piece, right? Are you making a conscious decision on what you're doing? Even as financial professionals and accountants, are you really looking at those risks? Have you analyzed it? Have you looked at your supply chain? How do you automate your supply chain? Do you have visibility to what they're saying? And these are the risks of climate change. We are talking of a global risk of economic recession. Have we planned for it? What are the alternatives? Do we have a plan A, B, C, and so on? In business continuity management systems, we have a cliche that we use. No one plans to fail, we simply fail to plan. And I think that's another aspect that we need to look at. So there is technologies that builds in business continuity, risk assessment, risk governance, climate risk, supply chain risk. And I think understanding these risks through data is an important piece that technology supports to bring this to fusion. Next is looking at a purpose-driven approach. So if I may ask the audience here and those listening, what's the purpose of your company? What's the purpose of your organization? Why are you there? These are hard questions to answer. And how do you sort of future-proof your company? So some of the things is invest in the current technologies and trends. How would you be using any form of automation for the regular work you do? Then you'll say, oh, people will lose jobs. No, they won't. Because you will repurpose them. As a company, I can tell you I've been 15 years with Vetusa, and every 2 to 3 years, the company goes through a restructuring. Restructuring of roles, responsibilities, duties, strategies happens regularly. I'm sure most of us are comfortable doing the same job for 10, 15 years, right? My job has changed consistently, right? And that's what, the only constant in life is change. And the sooner you adopt to change willingly and grasp that as an opportunity to improve and get ahead of the curve, that's where you get future-proofing companies. Adopt a purpose-driven approach to everyone's job. It brings people together in a very different way. Why are we doing it? Are you going to be the number one in the industry or the service that you're undertaking? Are you going to be the world's best in whatever you do? Right? Benchmark against global standards, not about peers left and right. That's, make the world a competitive place in the industry or your specialty. Focus on driving sustainability. Why sustainability? If you don't sustain yourself and you don't understand the risk, you won't make it anyways, right? I'm not reading through the slides in the interest of time, but the important aspect is to use these as opportunities to get ahead, right? Don't compete locally or in geographies. Compete globally. Compete in your skills of activity. I think we have the largest pool of management accountants, I think, next to the UK, if I'm not very familiar with that. But how do we use that? How do we do offshoring? How do we bring, as I said, Sri Lanka is so well positioned. We have, I think, 4 or 5 main underground fiber networks that run past Sri Lanka. We have some of the best resiliencies. Just to let you know, Vetusa, throughout this crisis, Colombo was able to ensure 100% delivery on time, zero code reds, even with the 13-hour power cuts and so on. We are proud of that we competed against the best in class across all these nations to be that. And that didn't come easy. Right? And that's the potential Sri Lanka has. Each and every one of you in this room, right? So I'm just going to, if I go to the previous slide, I speak about ESG and sustainability, and I thought it's important that I just touch a little bit on what ESG means. It is about a company taking responsibility for your environmental, social, and governance footprint. Whatever you do, it doesn't matter what you do, right? Are you taking responsibility? Or are you saying, that's not my job, it's somebody else's? And that's not the way we do business, right? It's understanding that transparency that Nishant spoke about. Are our businesses transparent? Are we transparent to ourselves? Why are we hiding it? What are we scared about? Someone gets to know. Today, that transparency is going to be the differentiator in you being around in the next few years or not. People are demanding it. Look at the social pressure. Sri Lanka, I think, had the entire, you take 9th of May, 9th of June, 9th of July, was the digital social media that changed the government without going to courts, without having a case, and without a trial. And successfully so. Right? That's what it enables. The transparency is required. So here are 3 areas that a company can look into. And this brings an organization should consider the risks from ESG. So for example, in reporting, there is TCFD, SASB, and as accountants, maybe these are things that you should start at least reading. Understand. This is why are we doing all this? Primarily, your companies want to attract investors, and you want to attract your customers, and you want to retain talent. All these 3 people want transparency and confidence. Why would they put their money in something that's not real? They want audit assurances, blockchain technology. It's not with the old safe and locking it with a key and the accountant having the safe key in his hand and walking around. It doesn't work anymore, right? Money is no longer the currency you keep in the pocket, right? How much of you have thought about those technologies and those security measures? How much have you invested in your personal time to learn about it? These are very hard-hitting questions. Think about it. And you want to do well? You want to know why we are in a crisis? We didn't even bother to learn. And guess what? We have equal opportunities to learn. No less to anyone else in the world. But we make a choice. And we have to live with those choices we make. And accurate reporting, what we say is measure twice, cut once. Reducing defect density of the reports and the accuracies you do. Any repetitive task can be automated very cheaply. It doesn't cost money. These technologies are there. They are available to those who seek and want to find it. Of course, to ensure the transparency is the next piece that I keep coming back. And it builds trust and legitimacy. And as Nishant said, the government has lost its transparency. But if we, the private sector, that is the revenue source of the government, start building our transparency. We have an anti-bribery corruption policy in the company. How many of you have that? We are committed to sign and undergo the training. We have 35,000 people across 25 countries. All of us are certified. That's a company standard. How many of you have thought about it? Right? We complain about it, but we don't want to do anything about it. Doesn't work. Right? Make the commitment. We read the UK Anti-Bribery Corruption Act. We looked at gifts and other things that you can give. There is a general counsel who will ask us, have you done it? You have to give a declaration. So as financial accountants, I think these are good policies to look at. There are multiple areas. I just touched a few. And as we go on, there'll be more. So the essential link between ESG targets and financial performance is another aspect that I want to bring. It begins with materiality to your company. What is material to your company? And this comes with the previous question again. What's the purpose of your company? What do you want to be? What's your wannabe statement? Have you defined it? Next is focus on your strategy, not on reporting. All the accountants I know have the greatest reports, but the show is over. No, you're only telling the story after that, right? But what's your strategy? If you report today, what's your strategy for the next year's report that you would do differently? How would you have advised them? And then we have the usual statement, I have told them, but nobody listened to me. If nobody is listening to me, why are you doing this job? Why are you there? Do you have any self-respect, right? Hold up. Hold up to what is right. Collaborate to avoid trade-offs between profit and benefit. If you do what is right, you will be profitable. Redesign organization roles. How many of you have gone through a role change? I spoke about this earlier, right? And automatically the investors will come along, the customers will come along, because you're competing in the global space. You're no longer looking left and right. You're really looking ahead. You're looking out of the shores of Sri Lanka. We need that currency. We need those investors to come in here. As Professor mentioned, investors will come. We don't need to sell off various things. You just start doing the right things. And, we are in the 21st century. Leaders should be thinking about their approach to ESG to correct and understand how it impacts the investments you have chosen to make and to prioritize the materiality of these things. Don't do it for the sake of doing it. Virtusa never did that. We did what was right, and by the way, the certifications came along. That was a commitment. There was no halfway mark of this. And let me just show you in the next slide the highlights of what we have achieved through ESG. You'll see the energy reduction. How many of you have measured the energy management in your company? How many of you have decided about renewable energy? Only when the power cut came, right? Until then, we are happy to use the CEB and complain about the rates. We don't worry where it comes from. Very selfish, right? How many of you are committed to make that investment in your companies? Only when the lights go off, right? Until then, we can't make any investments. We have no budget. But when the crisis hits, money also seems to flow from some corner of the world, right? But do it proactively. Do it as a strategy. Do it as a plan. I'd like to touch upon something, and this is a plea I will leave with the professor. Gender diversity and breaking the bias. I did notice in the panel there was only one lady. And I hope there are fabulous amount of distinguished ladies and eloquent people here, far more competent than any one of us. Please, we need to include them. And so that's a humble request. And breaking that bias is another important aspect that we need to look at. So these are some of the ratings. How many of you have understood about the Carbon Disclosure Project, EcoVadis? These are rankings that come, the governance structures. And whilst I show you this, Virtusa was a public quoted NASDAQ-listed company. Last year, February, we were acquired by a private equity called Barings Private Equity Asia, based out of Hong Kong and Singapore. And they were, in turn, merged with another private equity called EQT. And at their board meeting, now since we are private, these numbers are not there, but in their board meeting, they mentioned only one thing to the EQT chairman. Virtusa has achieved all these ESG accolades with little or no capital investment. We didn't have a budget line item, we didn't have a team. Plus, we have achieved double-digit performance improvements in growth and profitability in that last financial year. And I think that alone is a testament that ESG and doing it right is profitable. from business continuity to information security and a whole heap of things. Sorry. I think I missed a slide here. Can you help me to get onto the presentation mode? Yeah, okay, thanks. Yeah, so this is my last slide. And I'd like to share with some of the 6 blocks that I've put together, which is, to rebuild Sri Lanka with a purpose and passion for people and planet. That would be the message I want to leave for you. And if you think about a purpose for yourself, you will have a purpose for your company. And if the company has a purpose, the country will have a purpose. And you get passionate about these things. This is not something you just do. I always say I come from an ex-military background. I served in the regular force of the Sri Lankan Army. I was there for 18 plus years. And how did we motivate soldiers to go out and do what they had to do? It was not easy. But there was a purpose and a passion for what they did. It was not the rupees and cents that mattered. We all have families, we all have children, and so on. And I think that's the thing. And breaking the bias, I spoke about that. Benchmarking against international standards and global competition. How many of you companies have done that? Have you looked at what's out there? Taking responsibility for your ESG footprint. Establish digital processes to support good governance, transparency, and deter corruption. Nishan, I hope the companies will look at this opportunity, right? Ubers and all these others, you see, you can give a tip, you can do that. It's all transparently done. Provide equal opportunity and access by leveraging Sri Lanka's high literacy levels. Now, this is an important point, and I'm sure, Nishan, you would allude to that. We have a literacy rate that we have boasted of 96, 97%. Literacy is the ability to read, write, and understand numbers. Doesn't mean education. But with the digital divide being bridged, every one of us has equal access to read and understand. And that is changing. And that's what happened on 9th May, June, and July. People read and were educated on what they did. 9th August, everybody said, no, this is not something we want to do. People made that choice. Extremists and political stooges had no place when information and education is available. It will not work. And that's what digital technology will drive you and your companies to be a better place. Leverage technology to do more and better with less. That's what technology does. The automation does. The cloud transformation, digital transformation. Demonstrate your firm's commitment to fairness, best practices, diversity, and sustainability. And with that, I would like to bring my address to close. Thank you.
Thank you, Drew. Denver, you covered this whole thing with a series of questions. May I say, or dare I say, they were provocative to the degree that the questions allow us to search within ourselves, not just for the answer, but the practical application of insight and wisdom. Practical application. And he showed, I think, how it can be done, because it was done in that organization, right? So it was not, as you say, burukata, but it's the real world. And so we are grateful that ESG contributes to sustain and inform, fill up, expand the economy. We now have joining us remotely another very interesting speaker. He is right now in Singapore, and his angle is slightly adjusted from the previous speakers. Reskilling and upskilling. Interesting. Reskilling and upskilling. Could there be a downskilling? Well, I don't know, we think about that. To build an industrious nation. Professor Ho Yuki. He is, in fact, a council member and advisor to the CMA Sri Lanka. He is the Associate Provost for Skills Futures for Singapore Institute of Technology and is a former professor in accounting at the National University of Singapore. And Professor Ho is an accountant by training and a Master of Economics from Monash University in Australia, and also obtained his Master in Industrial Administration and his PhD from Carnegie Mellon University. So pay him heed as he speaks from Singapore. Professor Ho, the floor is yours.
Thank you very much. I hope you can hear me. All right.
Indeed.
Thank you, Professor Watawala, for your invitation for me to share something about the reskilling and upskilling of the workforce to an industrial nation. Right. I have heard the previous two speakers, and I must say that I really am enlightened and get a better understanding of the situation and the challenges facing Sri Lanka. So the agenda of today is to look at the characterizing a chaotic world. And in this chaotic world, we want to look at what are the opportunities available to us, particularly upskilling. How can we not waste a difficult time on a crisis to build the nation and prepare for ourselves for the next lap? And then I would like to suggest to you, what are the possible things we can do to strategize to reskill and upskill in a chaotic world? So this is how chaotic a world is. We have the wars that's taking place. We have the growth projections by region that will be declining entering into 2023. The impending global recession, whether it's a soft landing, a hard landing, and the food crisis shortage. And then we have the climate crisis. The COVID is still recovering. One of the largest economies in the world has gone back into shutdown again, partially. And then the disruption of supply chain. We used to call this a VUCA world, volatile, uncertain, complex, and ambiguous world. In fact, I would like to change the C instead of being complex. It become a very chaotic world. So in this instance, how are we to navigate through this very chaotic world? So this is how chaotic the financial markets is. If you look at MSCI World Index, since before the start of the pandemic on the 1st of January 2020, at the height, the global market has gone up by about 35%, and Sri Lanka actually has gone up by 115% in the stock market, in the Colombo Stock Index exchange, right? And thereafter came the COVID-19, and the world almost break into pieces, in which the MSCI index is probably about 3% up from where it was at the beginning of 1st of January 2020. Colombo, Sri Lanka, you are still ahead of where you were in 1st of January 2020. Yeah, at this point in time, 46.7% up. So moving forward to, let's just concentrate on 2022 alone. The world index has gone down by 23%, while Sri Lanka, the Colombo Stock Exchange, has gone down by about 28.8%. So the question we want to ask is, where are we heading? What will be in the future? What can we do about it? This is a crisis that's unfolding itself for the nation. And if you look at the volatility of the market, you realize that the Sri Lanka Stock Exchange is much, much more volatile than the world index as a whole. Right? So what are the possible implications for workforce in a very chaotic world? I'm going to zoom in basically on the people, right, rather than just the nation. I have been an educator my whole life as it is, right? So I feel strongly for the young people. The implications for the workforce in a very, very chaotic world, from the negative perspective, will be a deep sense of lostness, right? The people basically, there will be a deep sense of insecurity and the decline into a state of helplessness and resignation. It affects the mental health, particularly individuals where their economic well-being are threatened. You can imagine a young graduate when they went to the universities with a full hope that upon finishing the university, the life ahead of him will be great. But there he struggled to find a job. The loss of dignity and purpose is non-trivial. And thereafter, they tend into easily agitated, frustrated, and tends towards violence. And this is what I think happens in many of the revolution in the world, the Arab Spring uprising, because the young people felt that there is no hope, there's no future for them. And physically, there's a great loss. They don't know how to restart or break out of the rut as it is. You see, the impact on youth is drastic, a sense of hopelessness. So for us here in Singapore, this is what we're very, very concerned about, right? Namely, to ensure that the young people of today, which will be the bedrock of the society for tomorrow, will be taken care of. That we must give them a hope and a reason to live and a reason to thrive. What I like to do too is to look at the positive side from a chaotic world that we live in. I think the positive side, as the speakers, both speakers before me have spoken, there's awareness that something needs to change. We can't go on like this as it is, right? Have we reached the bottom? Probably. But if we don't do anything, we will go further down too. There is an exploration of a way out. What else can we do? Things that we have done traditionally have not worked. Can we think of a new way to get things done? And the existential instinct to do something to survive. This is one of the most interesting aspects about being a human, right? That is, we will never lie down and let the world be whatever it is. In our existential instinct, we will break out. We will have to try something new. And this, the chaotic world and time, is a time to try something new. And deep within us, there's always the desire to traverse the upswing of the U, right? We have hit the bottom of the U, and we do not want to stay at the bottom bar of the U for too long, right? Because at the bottom bar of the U, if we stay there too long, it will plateau, and it will not be flat. It will be downward sloping to bring you to another larger U as it is. So the positive aspect of a very chaotic world is a creation, all right? And the desire to create the necessary infrastructure and opportunities for us to turn the corner. Ladies and gentlemen, this is where I'd like to suggest something that we as a university here, or something that we have thought about, is the breakout mode, the concept of learn, unlearn, and relearn. So in terms of the opportunities in a chaotic world, the concept of the learn, unlearn, and relearn probably goes in this way. In terms of learn, we have to go back to build and ask ourselves, what are the core skills that we need to survive, right? In the accounting world, what are the core skills that does not change and we need to acquire them? I have the tremendous opportunity and privilege to chair the curriculum review for the CMA syllabus, the professional program, right? Together with a team of experts, we actually look and ask the question, what are the key skills that management accountants need? What are the things that we must continue to reinforce, right, in order to make us better management accountant? We can't stay still as where we are. We need to move forward. The second dimension is that we need to unlearn the outdated skills and habits. We can't live on romance alone. We can't live on the past alone, right? There are some bad habits. There are things that we constantly do that is out of our comfort zone, right, that we want to stay within. But unfortunately, that comfort zone will not bring us anywhere. I take the simplest example. If the accountants have not break out in trying to use spreadsheet and calculators, we will still be stuck in stone age using our just manual calculation. But today, we probably have to move beyond the calculators, beyond the spreadsheet, into the digital world in which things can be done much better, but it requires us to unload the outdated skills and habits. And finally, there must be the passion and drive for us to relearn the new skills and habits. I need to say that I, as a not so young man anymore, relearning the new skills actually is tough. I went back to learn how to do programming, Python programming. I went back to learn how to do Tableau, and to relearn some of Power BI, to relearn some of those skills, which I hope they will keep me on the edge. Unfortunately, you're right, this old engine takes a lot of effort to start, right? But for the survival, for the opportunities in the chaotic world, these are probably the key concept that we need to deal with: the learn, the unlearn, and the relearn. So if I were to ask you, terms of strategizing to reskill and upskill in a chaotic world. Assuming that you as a nation is given US X billions of dollars to invest as a nation, what will be your priorities? Of course, we understand there's an existential issue. We need to feed the people. We need to buy the medicine. We need to buy the fuel. All right. Those are key priorities, existential priorities. Beyond the existential priorities, what else do we need to do? And this is what we need to strategize in this next segment. I'd like to suggest to you, right, going back to the accounting world. In the accounting conceptual framework, an asset is a resource controlled by the entity as a result of past events and from which future economic benefits are expected to flow to the entity. You may ask, Prof, why are you giving me a 101 in accounting? But this is where we need to look at and understand the fact that the human resource is one of the most critical assets for building an industrial nation. Sri Lanka is much like Singapore. We are a very small country. We have a limited population. And our most important resources, at least for us in Singapore, and also hopefully likewise for Sri Lanka, is our people. Our people must be an asset. And they are asset because they can provide future economic benefits. And this future economic benefits has come from the fact that there was past investment in them to prepare them such that they're able to provide future economic benefits that flow to the nation. So let me basically set this piece, because I'm going to use this piece, this concept in the next slide. You see, if we were given X billions of dollars to build a nation, I'd like to suggest to you, all right, there are two very fundamentally opposing way to spend it. One is to expense them. You use the X billions of dollars to subsidize companies' payroll. You use the money to provide welfare benefits. And these will by nature provide the short-term benefits that allows you to traverse out of a difficult circumstances. I'm not suggesting that you don't do that. But my concern is that if you spend the X billion dollar in this manner, it is an expense, right? The people will be hungry next, right? Then there will come the next payroll as it is, and so on and so forth. But if you use the X billion dollars, setting aside part of it for existential purposes, and the other part of it is to subsidize the acquisitions of assets and know-how. And may I suggest the assets in this case must by definition include your human resource. If you are to invest your money into your people, you are to invest your money into the university, into the education system, into the training academy, to empower your professional association, to train the people, to be able to make education and training accessible to a larger group of people. Ladies and gentlemen, you are not spending the money, but you are investing the money to create long-term benefits and long-term assets, which in due time will bring benefits to the nation. So this is what I'm fundamentally coming back to, all right, in terms of thought pattern. And I'll show you the examples, right? So this is the traditional view in terms of the skilling and education for a nation. We have the pre-primary education, the primary education, the secondary to high school education. Thereafter, they branch out into the vocational and polytechnic, or basically so-called the professional, and then the university and postgraduate. Ultimately, they all enter into the adult workforce. And this is where we basically has been existing for a long period of time. And we suddenly realize that this is insufficient for a chaotic world. Because this is the framework for a formal education approach. And it is the current skilling approach that we always know and only know for that matter. I call this the front-loading skilling model. We teach everything up front through the 12 years of high school education, 4 years of university, 2-3 years of professional training, and voila, we expect them to be a professional and able to meet the needs of the nation henceforth for the rest of their life as working adults. I'd like to suggest in this very chaotic and volatile world where skill sets are training all the time, where new technologies and new skills are being introduced, this front-loading education model is not sufficient. See, in terms of the continuing training and upskilling for adults under this front-loading education model in which the working adults are left on their own, the training and upskilling is abhorred in nature. And employers, it is employers and employees' responsibilities. It is own time, own target. It's abhorred. It's laissez-faire for that matter. And many times the training and upskilling are constrained by time and financial resources. Company will not want to spend too much in terms of upskilling their workers for the fear that they will lose them. And there is also always the cost in terms of training the people. This is looking at expenses, but not looking at investments. And interestingly, in this model, there's very little government involvement. In fact, the government takes a position that the ultimate funding is only from primary all the way to universities. And this is where their training and their education for the nation and their responsibility stops. And the rest, gentlemen and ladies, you are on your own, right? We have found this to be a model that will set us back in today's modern world and a chaotic world. So what are the possible implications or outcome of this laissez-faire so-called training of working adults? You will become a market-driven with minimum government involvement and even the expenses of money and investments. And we run into the inability to meet current manpower needs because, like for example, ESG, for example, in terms of technology and investments, it all depends on the company or individuals, where there is no what we so-call a macro planning to bring the workforce into a digital age. And the manpower resources will not be resilient to exogenous shock as it is, because the manpower resources and planning is not able to foresee what the future looks like. They are just existing on the day-by-day, hand-to-mouth. And the economic prosperity is by evolution or market-driven rather than purposeful design for a nation. And this is where we always know the market can fail when it comes to training, when it comes to investment in human resource, because human resource is an invisible asset that cannot be put on your balance sheet as it is. So I use an accounting as example, since that is always in my domain, right? So this is a model that we look at in terms of relooking at accounting education for a new world. And this is something that I've been working on for the last couple of years, looking at how do we retool the accountants of today to ensure that they become valuable professionals in the future. We start out with a long time ago in the 60s, 70s, and 80s. We were educated through the pillar concept, the pillar approach, where we are entrenched in terms of accounting knowledge. And thereafter, we realized that accountants need to learn how to communicate. They need to learn how to have EQ skill because they're not just technocrats as it is. They're managers, they're advisors, they're consultants. So we add in the pillar in terms of the soft skills. And in recent years, particularly in the last 5 years or so, we suddenly realized that we have to undergo the entire accounting training and accountants with the information technology or the digital skills. Because if we don't, literally, they are of limited usefulness. We have to power them with the spreadsheet, with the Tableau, with the data analytics. And right now, we're talking about artificial intelligence and machine learning, and so on and so forth. I call this the I-shaped approach. Unfortunately, in the last 2, 3, 4 years, we suddenly realize this is not enough because the ESG piece is missing. We suddenly realize the ESG, climate change, all these are existential issues in which you are cut across all of society, the whole of humanity, and the accounting training must take a pole position in that because whatever happens to the climate will affect us ultimately. Right. So we need to instill this block into all our accounting discipline, from audit, from financial reporting, to management accounting, to taxation and what have you, in order to have this reinforced approach for the training of accountant. We call this a reinforced pillar approach. And I'm pleased to tell you, in the revised CMA curriculum, this is a concept that we are moving towards, particularly for management accountants. We want them to hold a pole position in society, all right, in the business world, because they're competent not only in the steep technical skills, they are good communicators, they understand digital skills, they also understand the existential issues pertaining to ESG. I paint for you a possibility. So let me come back to a simplistic approach and in terms of upskilling of the working adults of our nation, I use a 5 suggestions. This is my simplistic approach based on some of the things I've learned. Number one, we need to raise training and upskilling of working adults as a national priority, right? It cannot be just business driven. I think as a government, as a whole of society, they have to say that this is a national priority as much as providing primary and secondary or high school education to the people. Secondly, we need to set up specific national training coordination agency, right? That you will leave it to the market forces. If you only like what you saw have a hope, but with no proper operational processes and procedures, you will have to continue hoping, and that hope will not bring you very far. And I'd like to suggest the third step is to work closely with the stakeholders to map out training needs, the universities, the vocational institute, the polytechnics, the professional bodies. Work with the employers, the industry, the trade associations, and the individuals. We need to map out what are the training needs, what are the skill gaps, what are the skill needs, and the National Training Coordination Agency has to put the whole wheels into motion to allow the various stakeholders to deal with the supply and the demand of workers. And I suggest a fourth point is to set up the training infrastructure to enable training to occur. And finally, to set up the training blueprint and accountability to track progresses. Let me, without shame, to share with you some of the things that is happening in the Singapore context. And this is where we are struggling and we are trying to make progress. For point one, the government has made it very clear that the priority and the budget is to train the working adults, because the government is very clear in our mind. Rather than setting X billions of dollars for welfare when the people are out of job, why don't we spend the billions of dollars to train them in advance, right? So we set up the Skills Future individual credits, where people are given what is so-called credit dollars in their accounts for whatever training they choose to sign up for. And at the corporate, at the national level, in the next 3 years, our Deputy Prime Minister has announced they will spend 17 billion US dollars in the next 3 years to ensure that the training places are available to upskill the nation. You see, you leave it to the company to train the people, it will be very expensive. So what do? You co-subsidize the companies, right? Of course, in economics, you never give anything free, because anything free will always result in overconsumption. So literally, but you reduce the cost of training so that the companies are willing to be trained. Singapore set up the Skills Future Singapore, right? And it is a large institution that coordinates the national training as it is. And interestingly, the Skills Future Singapore is parked within the Ministry of Education. Remember, education for the nation no longer stops at the university. Right now, the signal is that it spills over into the adults. It is the Skills Future Singapore, a agency sits within the Ministry of Education. Thirdly, we work closely with the stakeholders to map out training needs. We engage the stakeholders. We look at the funding mechanism for training. We come up with the industry transformation map concerning where the industry will be going. And we work at mechanism to motivate, to engage the individuals. All the universities right now are roped into this whole national priorities. The universities no longer produce undergraduates and postgraduates. The universities are responsible for continuing education and training. That means our role no longer confines to just structured 4 years program or master's program or PhD program. The responsibilities of the university covers the training and the continuing education for the working adult. And the fourth thing that we did was the setup of the training infrastructure to enable training to occur. Is a coordinated training infrastructure, the National Center of Excellence in Workplace Learning, where people can work and learn at the same time as it is. They don't have to take time off from their work and just to attend classes or to quit their job to sign for 2 years of master's program. We need to allow these to work together such that they are able to reduce the cost of training to the employer. The revitalization of the Institute of Adult Learning, where I sit as a board member, where we're looking at how do we actually bring learning back into the adult space, the pedagogy of learning, right? The science of learning, the technology of learning, and so on and so forth. And of course, in any of these mechanism, there needs to set up for an accountability structure and a milestone to track the resources. Skills Future Singapore audit every company or institution that takes money from them. There are periodic dialogues, periodic reporting, periodic audit. This is to prevent anyone from dipping into the pot and to squander away the money. Right? Privileges, right? Help always comes with accountability. So, strategizing to reskill and upskill in a chaotic world, priorities. Priority one is to reskill your entire adult workforce. I like to believe that the government will have to take a strong signal to say that this is a priority. And then the enhancement of continuous and lifelong learning. And the third priority is to redefine formal education. And that formal education, by definition, must include the working adults. So with this, I'd like to finish off with just two statements. In our lifetime, I came from a very poor family. Education has given me a life. Education is a great social leveler. I have no doubt I benefited from it as it is. But I like to believe that we need to move to the next level. Continuous upskilling is a lifeblood of economic prosperity. It is not enough just to give the people a good education. We have to ensure and enhance their continuous usefulness in a very chaotic world. And with this, ladies and gentlemen, thank you for your time and thank you for your kindness in inviting me to share with you. Thank you very much.
Thank you very much to Professor Ho, who kind of neatly tied things up as we traveled across this rather interesting, I would dare say, vital area in session number one. It impacts every one of you that are gathered here and those not gathered here but in the different institutions everywhere, including the government sector. We conclude with inviting Professor Watawala to hand over tokens of appreciation to those who have contributed so vitally in session number one. So may I invite the President of SAFA to come up on the stage and accept a token of appreciation, Mr. H.M. Hennayaka Bandara. And thereafter, Dr. Nishan Timel. And Denver De Silva.
Thank you. It's appropriate now that we take a moment, refresh ourselves.
11:10, come back.
Okay. There is a time limit that has been placed on this break, so you'll need to manage the logistics of that as efficiently as possible. 11:10 is when our next session will begin, so please do partake of the refreshments that are available. You may wish to bring them to your tables if that will help, and we will prepare for the next session at that time.
We'll prepare and then launch into session two. But you launch yourself from your chairs to that area further in the other end of the room. Please do not delay. Looking at us doesn't help. You will be able to enjoy the refreshments, serve them, and come back to the tables and continue to enjoy such refreshment. Okay, so 11:10.